It is the last video of the week, so I thought I'll take a look at some longer term charts in the SP 500. We'll dive into some smaller time frame as well. Just kind of see what happens, see if everything is still the same as we thought. I am your host, the Cowboy. This is ELLIOTT WAVE Cafe and Charts of the Day. Let's get started. All right, so the market this morning tried to trick us a little bit and sold off, quite interestingly, and then only to reverse very quickly and close the day on a super positive note. There might have been some news. Lionel Brainerd came in and, she said she's hawkish. The market, sold off and then, we recovered. So anyway, some intraday drama that kind of happened in there, but the idea is that we continue to push higher, which is kind of what we want to see based on our assumptions here, over the past couple of weeks. So let's take a look at the monthly chart and the longer term count, and then I'll dive over and see what's going on in some of the other internals. Basically, from the financial crisis low in 2008, 2009. We're looking at a big impulsive move in this market. We have a nice, long motive wave. You have a wave 1, 2. You've got a larger third wave. Then you have, a big flat here that terminated at the pandemic low in March 2020, the market low, I would say. And, since then we've rallied pretty nicely, again, in a pretty strong impulse, and now we're coming back into what looks to be so far a pretty interesting corrective action. So based on this count and based on the fact that this move from the highs to the lows here still looks highly corrective, we're going to go ahead and try to label this decline as a wave 2 of the larger wave 5. So you're looking at the wave 1 of the lows, wave 2, then in interior here you got a 1, 2, 3, 4, and 5 for a third. You're doing a fourth, and then we're looking for a longer fifth wave upwards. Now the question here is, and something that a lot of Elliotticians and people that watch market just like we do, could argue that maybe this fifth wave, this cycle fifth wave, terminated back here, and you're actually about to sell lower. So you go in a 1, 2, 3, 4, and up in 5, and you're done, and you begin a much larger correction lower, which is a fair assumption. The only problem that we have is that so far we have only sold in 3 waves. So for this to start to pan out, you would have to do a 1, 2, 1, 2, 3, 4, and 5, 4, and 5. So you would have to start somewhat of a much more aggressive sell-off here, price action coming lower, right? Because you would look, if this is a longer term, let's say cycle or super cycle wave 5, the correction here has to be pretty strong. Even if this is just a wave 1, right? Let's say of this longer fifth wave, let's say that this move in here, right, still kind of works itself out like that. And then you would have wave 5 terminate there. I would have to change the degrees, obviously, right? And this wave 5 could continue, something like that in the future. Then this back here, right, would have to be a wave 1 of 5. So we would look at it, fine, that's the longer fifth wave, still has to unfold. And then you have a 1, 2, 3, 4, 5. This would be a wave 1 of the lows. You would have to do a wave 2. Then you would have to do a 3, 4, and a 5, and by the time you're in 2040 or 2050, this bull market continues with ups and downs. So just to kind of look at how a longer term super cycle can unfold. If it's done back in here, why would we have reasons to believe that that's the case? These markets, earnings continue to grow. I think the economy grows, everything. It's more of a you know, kind of, I think fundamental questions and existential questions for that matter. If you're thinking that this is, you know, the end of the you know, all bull market, and you're basically correcting all the way back here, right, to 680, it's quite aggressive. But I think I've talked about this before. So anyway, I wouldn't go as to say that this move in here is complete necessarily here at the larger supercycle degree, and I would probably treat it as this being a wave one still, with a maybe, you know, a more bearish price action like a wave two coming down. So but we'll deal with that. So now, kind of coming back to this idea here, right, we're looking for this as a 1, 2, 3, 4, and 5, a 3, 4, and a fifth wave in progress. This can unfold several ways for a fifth wave. You can get an ending diagonal, you can get a you know, you can get a regular impulse, but just with smaller threes and with a smaller 3, a smaller 4, and a smaller 5, something like that. You know, that's very normal. You're just getting a wave one that's a little bit longer, more extended. It doesn't have to be necessarily a you know, an ending type formation. As long as wave 4 doesn't go into the territory of wave 1, you can get an extended wave 1, a 2, a smaller 3, and then even a smaller fifth, because wave 3, as we know, cannot be the shortest wave in the sequence. And then you can finish up this wave 5, you know, a little bit later. You can get an extended type fifth wave, because wave 1 was quite a short in here, then wave 3 was you know, more extended. And if you kind of were to think that, you know, equality between wave 1 and this wave 5, that would have, I think that came somewhere, you know, if you measure this with this back in here, it probably came somewhere up into these levels. So we, you know, we kind of overshot that, and we move actually higher. So this could open the, you know, the gate for this kind of extended upwards, let's say, in a larger move. So this is what's going on at this degree of trend, you know, a discount in here, where we're looking for this wave 5 to continue higher. If for whatever reason, you know, that is done, and I'm deleting all of this, right, just kind of delete that and say fine, you know, you're back here, this was the end of the fifth wave, right, and now you're beginning a correction. You know, I would look at it again as a wave 1 of this larger fifth wave. So let me just go back to my saved counts in here, and I'm going to go ahead and take a look at kind of what's going on in these internals. Now, this is on the monthly chart, so this correction here looks fairly short. It could be the entirety of the wave 2 back in there, like I've talked about, you know, so many times. I would take this wave 2, you know, delete these. Okay, I'm going to reverse that and then push this wave 2 here, and you will start 1, 2, 3, 4, and 5 up and done. Let's give it the benefit of the doubt and just assume that maybe it's too short and it still needs room to correct to the downside. So I'm going to go back like that, and let's take a look. So from a 1 month, I will jump over to a 2-week time frame. So you can see the internals here. That's the fourth wave. I have another alternate count in here, right? That still looks bullish in a 1, 2, and then a much larger move higher. But you know, no point in discussing this right now. We'll see kind of how we unfold from here. So going in a 1, 2, 3, 4, and 5 for the end of this primary wave 1. Now you're doing a decline in ABC for a W up in X. That's that 15 to 20% correction I'm looking for, and then a decline, you know, one more time towards the end of the year in this wave 2. So from a 2-week, let's jump over to a 1 week in here, and that's kind of how it looks. These are the, you know, deeper internals here: 1, 2, 3, 4, and 5, 4 and 5 for a wave 1. Then you sell lower in a wave A, up in B. Right, this is a 618 pullback of this entire decline. You sell over in the C, you complete a W, and now you're doing wave A, which we already think we're very close to completion here. Then we're going to pull back in a wave B, maybe into the 618 or 50%. That's when everybody kind of gets bearish again, and then we squeeze higher in this waves X. The most important point for me here is this 4639. If we break above that level, it's likely that we can secure a wave 2 low back in there. Until that happens, I'm not going to rush for that. I'm going to let this develop, and I will go with the more extended count in here to just kind of give this wave 2 a little bit better proportion. Okay, so this is you know, this is kind of one of the ways to look at it. And you might ask yourself, hey, how can you look at this as being a can you look at this as being a fourth wave? Well, at this degree of trend is very hard because you don't have anything. I mean, the only way you would have to compare it would be this wave back in here. So you have to go for 1, 2, 3, a big large 4, and then a 5. Mind you, we haven't gotten into the territory of the wave 1 in here, right? That's 35.89, but it's so disproportionate that it leads me to believe that that's not the case. I'm going to watch it. We'll see what happens if we make new all-time highs in here, but it's just very it's kind of very large and very, very close to the top of this wave 1 in here, if you ask me. So we're not gonna necessarily go with that as the primary interpretation. Now, let's see. So we've discussed that. Now let's see kind of what's going on in the internals here and kind of how this looks. So from a 1 week, I'm going to go to a 2-day chart in here. All right. That's the decline here. Impulse. You go up in a wave B and then down in a wave C. And here is that wave A. Let's jump over to a 1-day chart. So here is the push in a 1, 2, 3, 4, and this morning we sold off, but then we came back towards the highs, which means that possibly into tomorrow we're going to try to finish a fifth wave advance in there. That would be, let's say the completion of this wave A, and that would kind of maybe coincide with some resistance here at these levels in there, about 43.09, where I would assume that level would stop. You got something back in there as well, so you go up in A, and then possibly for the next couple of weeks here you could still get a correction back. So maybe another month, right? Month of June, could that start to turn really ugly? Hopefully not, but that would be kind of one assumption to kind of have here. It doesn't have to pull back 618, it can pull back just 38%. So we'll see kind of how that unfolds. So let me jump over to a 2 hour if I can get a decent chart in here. Sometimes when I go on the smaller time frames, my software here gets a little screwy with from where I'm getting my data from FXCM on this one, and it's failing to upload in here, but we'll let it go here. Oh, there it is. So this is the 2 hour chart. So that's the move off the lows. All right, so we've gotten an impulse in here in a wave 1, pull back in a wave 2. I think that's a pretty decent impulse here in the wave 3. That's probably already finished. I'm gonna look at that just slightly above the 1618, right, which is kind of what you want to see for a larger third wave advance. Then we have pulled back. I'm gonna get rid of that. Then we pull back in a nice zigzag in here in an A, B, and then down in C. And then we've done, I don't think we made a new low, so we've done a 1, 2, so 3 in progress, and then 4 and 5, and then we can complete a wave 5 somewhere up there. Let's just do some measurements to just see how that looks. But this is a pretty nice, I would say pretty nice impulsive move. And let's see, let's just kind of connect, because this gave us, you see, you can do the channeling in here, and you can connect the top of the wave 1 with the top of the wave 3 in there, and then project it from the wave 2 low, like that. And the markets actually tricked us a little bit lower. They just sold off one more time for this fourth wave. Usually you're getting a fourth wave that stops right there and then pushes higher. We made one more low and then we climb back inside the channel. So let's see how this kind of how this works for now. Let's connect the 2 and 4 at the moment and see if we can get some targets for a wave 5. So that's the other thing, right? We go from 2 to the bottom of the wave 4 in there, project that from the top of the wave 3, and that can give you some upside targets here for a fifth wave. It doesn't have to go all the way up there. It can fail, obviously, to reach those levels. It's more of an ideal, kind of structure. Let me get rid of these lines. There you go. And let's do some measurements on this fifth wave. So we're going to go, so for a 5 versus 1 plus 3, usually the targets are when you have more of a regular third wave. Some of the targets are 38% distance travel in this fifth wave compared with the distance travel between wave 1 and wave 3. So the way we measure that is from here all the way through there, and then we take 38% of that, and that would reach all the way up there. Now for me, it's important to have the structure complete. So you have a 1, 2, you'd have to do a 3, a 4, and a 5, and maybe that's where we're finishing. The next target up would be the 618 at about 43.29. That would be the next upside target, let's say, for the fifth wave. So keep in mind 42.30 to 43.29, and keep in mind this level right there, 43.09. That's another one that's fairly important right in there. So what I'm going to do is I'm going to go and pin this ratio up, and then I'm going to do one more ratio, and I'm going to go 5v1 ratio analysis, 5v1, and we're going to look. I'm going to pull this to the side, and that's usually getting towards equality. We have hit the 618 of 5v1 right now. That would be more of a truncated fifth, right? But it doesn't look like a completed structure, so I'm not gonna look at that right now. And then 100% comes in at about 42.60, so somewhere in between. Let me get rid of the 50%. So that's another decent target to the upside. So anywhere in the zone here, there's a cluster of fibs along with some previous resistance levels where we would have a fair assumption that the markets could travel through and possibly finish this initial advance in this wave A, and then we would get a pullback. I'm gonna move this out of the way. Then we would get a pullback in a wave B that would look something like something like this. So you would get, we'll see kind of how that would unfold, but you would get an A, B, C down, and we would measure, let's say, some fib zones, retracement between this. Once we get that high, then we would watch and see kind of how deep that would start to unfold. And this could be a flat, it could be it could be a triangle in a B wave, it could be a zigzag, it could be a double zigzag, it could be a lot of things when you're getting into the B wave scenario. And I think I'm going to screw up my charts again, but then we will look higher again in a bigger C wave that would complete the larger X wave that we were watching, at the higher degree of trend there. So that's why I'm kind of watching this internally in here, and I've been, kind of bullish in the pro room as well, and just, talk to the guys there. We've had a pretty nice, webinar every Thursday. We do at about 6:30 in the morning here in Chicago time, and we go for about an hour and a half, depending on how much we want to cover. And we've talked about, futures and macro and all the things that we usually follow up there, and we discuss some altcoins and Bitcoin in detail and all those, just to kind of give a comprehensive view of what's going on. So here is the B wave in here. Right, that's a 50%. You can see that I just pulled a fib. This is automatic from the software, and then that would be followed by, let's say an X wave, a C wave of X, and then you would push all the way up there. So again, watch this zone in here, because I think this is an important area for this initial advance, right? And then we're probably going to get a little of a pullback followed by a rally higher again. Guys, listen, it's the end of the week. We have one more day tomorrow. I'll see you all next week. If you want to come join me, trade with me in the pro room, you see the link below. There's also a public channel. You can come in there and we can discuss different charts. You can find me on Twitter. But as always, I appreciate you being here. Thanks for watching. I'll talk to you later. Bye-bye.